have our host. Hi, Hamad. How are you?
Hi, good afternoon, Jessica. How are you?
I'm doing great. So, as I was telling you guys, we do have Hamad Rana of Water Field Advisors. So, Hamad, tell them about yourself. What do you do?
Hi, good afternoon, everybody. As Jessica mentioned, my name is Hamad. I'm a chartered accountant working with the Vertex Partners and Waterfield Advisors. So we're an accounting firm. We're about 8 years young, and we are predominantly working in the NDIS space. We look after about 200 NDIS providers across Australia. A lot of our providers some of them have one participant and some of them have 200 participants. So anywhere between from 70 grand to up to $30 million they are doing in revenue. So we've been working with a lot with our providers in terms of the changes that are coming in, and I got invited from the 360 or Support Lead platform to give a bit of introduction of the changes that are happening, so that everybody is aware of the new changes and how to navigate through them. So that's what we'll be talking about today.
Okay. So, Paolo, can you
So
please
if I can
flash
ask Jessica, if you put, yep.
Was that sir? You're cutting in and out. My apologies.
Okay, so is it okay now?
Yeah, it's actually okay now. Yep. Go ahead.
Okay, so what I'll do is without I guess some of you guys, I mean most of you guys would know by now that there has been a lot of changes that are happening in the NDIS space, and what we see is that it is getting more and more complicated and more compliance is coming in, and that's from your compliance perspective, but also from the taxation perspective. There has been a major change in the way the businesses operate, and this is not just for NDIS; it's actually across the business world. Now we have to work out on the Payday Super. Now that is for most of the businesses a big change, because traditionally what used to happen is you would have 3 months of leeway where you would need to pay every 3 months the super. So that means making 4 payments in a year. And even for that, we used to get 28 days once the quarter finishes. But now with the Payday Super, we only get 7 days to pay the super from the day the super is due. So which means you're going to have a lot more regular payments going on and a lot more frequency. And the cash flow, which used to wait 90 days, is now going to be going out of the business in 7 days. And then we're going to go through what are some of the SCHADS allowances that you need to take care of, and how it has become very important now to break down on how you're paying your employees, because some of your allowances you do not have to pay super on it. And although a small amount, but when you add it into with multiple employees, it all adds up. So if I can get the presentation that I sent, if I can bring that up, please, so I can run through that. There you go. Okay, so I guess so first of all, mainly I guess the target of in terms of why is the government doing this, and why they're trying to make things hard. You would see that a lot of times there are a number of companies who go into liquidations or who have financial troubles, and one of the key things that they came out was that it was the superannuation of a lot of the employees that actually eventually got missed out, where sometimes the government had to guarantee it, and so hence they made a proposal now, which actually has become a law now from 1st of July 26, that we must pay a Payday Super. And then, so what does that Payday Super mean? So Payday Super, look, in a nutshell, it simply means the date you're going to pay a salary. So technically, the same day you should be paying your superannuation as well. They still do give you 7 days as I guess a transition period, so you can make a payment on Monday and pay the super on Friday or the following Monday. But eventually, it is going towards the time when the same day you transfer the money into your employee's bank account, the same day you transfer the superannuation into their bank account, into the clearinghouse as well. Okay, just go next, please. So these are, we'll just go through some of the what the old rules used to be. So previously, when the quarter used to finish, so your quarters were January to March, April to June, and July to September, and then October to December. And then we used to get 28 days after that. So a January to March quarter, the super was due on 28th of the April. So as you can imagine, so you almost had, if you paid somebody in January, so you had almost about 90 days before you had to pay the superannuation. Okay, so which has now changed. Now you will be getting only 7 days after the payday. So the day you pay, within 7 days you have to pay. The other thing is the superannuation guarantee charge. So this is a charge you have to pay if you pay super late. So this is generally a late payment administration fee, which was not tax deductible. It is not tax deductible. However, the GST and the late payment are still not tax deductible. And later on, we'll go through an example where you'll see a late payment on a superannuation is very, very costly. Okay. The maximum contribution base. Now, this is mainly for people who are earning big dollars. When I say big dollars, we're talking about $250, $300,000 and up, because you have a cap that in a year you can only transfer $30,000 into your super. Now that cap has not gone into a quarter, so which means, so technically speaking, somebody in a quarter should be getting $8,000 to $9,000 super, no more than that. But as I mentioned, that applies mainly to people who are earning $300,000 plus. And the late contributions in the new system, they will be automatically applied. We used to have an offset they used to get, so which will no longer apply in the new system that's coming. Well, which is already live actually. Next slide, please. Okay, so some of the terms that you're going to start hearing, and this is a change that are happening, which is the QE day or qualifying earnings. So when they say qualified earnings, so not every amount that you pay to your employees attracts superannuation. One of the things that, for example, overtime, you do not need to pay super on overtime. So later on, I will speak to you, because a lot of, for example, my clients, they pay their contractors on ABN. So it's going to be a very interesting transition for them on how they're going to capture that, because I'm assuming even for most of you guys, if you have ABN contractors, you just get one invoice that says, 10 hours, and that's $700 or $800, but there's no breakdown of whether it's a meal allowance, whether it's a overtime, what sort of payments they are. Going forward, all your software providers for payroll, they will be required to report the income with an income category, which will be reported to the ATO. But that's getting more technical, so that's more relevant for your payroll officer or payroll person who processes your payroll. That going forward, we will need to be putting in the income category. To give you an example, you have a support worker that got paid $1,000, and out of the 1,000, 800 was the normal salary, and 200 was overtime. So the $800 that's paid will be classified as qualifying earnings, and the 200 overtime will be classified as non-qualifying earnings. This is to make sure when they do the data matching and they do the numbers in the background, is to make sure that you have paid the correct superannuation. Some of the clients, they do try to do things where they say, okay, I'll pay for 5 workers and the other 5 I will not pay. So this kind of reporting will be essentially capturing those kind of clients who, I guess, deliberately or non-deliberately hold on to the super. Next slide, please. Okay, so what this compliance clock is looking like going forward. So QE day, this is essentially just your payday. So that could be a Thursday or a Friday or whatever day you choose. Now, within 7 days of the payment, you will need to transfer this superannuation. A lot of the softwares like QuickBooks, Xero, they have now changed their super platform to essentially remind you and to do the payment. If it hasn't, please speak to us and then we can let you know on how we can essentially help you get that set up and to ensure that you're getting automatic reminders. Now, even then, if you make the payment on the 8th day, that is still considered a late period that you've paid it late. And based on that, the ATO can issue an assessment and charge you a penalty for it. After 28 days, if you haven't paid it after 28 days, you are issued with a notice to issue payment, which generally comes with a penalty as well. And anything past 28 days, you're going to have ATO start chasing pretty aggressively for the super. So yeah, so that's you can say they've become pretty strict on the superannuation. Can you just go next slide, please? All right. So super, especially the super, essentially, look, it's going to hurt the NDIS providers pretty hardly because a lot of the NDIS providers are already running on a pretty thin margin, and you have a high staff turnover, which means getting the files ready, getting the papers ready, which is always an issue. Can you, just give me 1 second, please. I'm just gonna get some water. Okay. So for the SCHADS Award, one of the other things is SCHADS is pretty strict itself, and with Super, it's making even more harder. So yes, look, for some of the businesses or some business owners, they might panic of like what is happening, how they're going to survive. But eventually, if you get your processes and procedures in place, and you'll need to put some discipline in your financials, then it can make it work. Okay, and the other biggest thing that's going to make a change is the support workers that are working as contractors. That's the one where if you look at the media and all that, they're targeting sham contracting as well. So that's going to come to you, but we'll talk about it another day. For now, just remember, most of your ABN contractors under the superannuation guarantee laws, they classify as employees, which means you have to pay superannuation for them too. The last one is the staff turnover. Now, with the penalties and the interest that is coming in, you have to make it really strict rule that when you onboard a new employee, that their superannuation details, the ABN number, or the tax file number, the date of birth, that is provided to you before they start the shift. Because essentially, to ensure that the super is paid within 7 days, it is the employer's responsibility. And simply saying, oh, the employee did not give me the superannuation details it's not an excuse that the tax office will accept. Now, with the shift-based workforce, you have to make sure you have a good system such as Supportly or Workday 360, so you can capture the hours they're doing, the allowances they are doing, to ensure that you are only paying super when you're required to. Next slide, please. And this is just an example of the SCHADS allowance minefield that you have to go through. And this is we do this for a lot of our clients when we're processing the payrolls. You have to look at what sort of award it is, what sort of is it a broken shift or is it a sleeper allowance? Is it overtime? How long is the shift? How many hours they've done in a week? So all these checks are need to be done in order to make sure that you are correctly paying. And as you can see here, the sleeper allowance, which a lot of people are getting, that there is no super on that. There's a lot of the audits that we do, we find that our clients have been paying super on the sleeper allowances as well, which is just money out of their door, which they didn't have to. Can I please go next, please? Okay. Now this is a news I guess no provider wants to see, but essentially on average, your SCHADS award that has gone up by 4.75%. However, the NDS pricing hasn't gone up by 4.75%, which means the provider has to fill in the gap. And as you know, the margins are already thin. So just getting more and more gaps is just not going to make anything better for you. It's only going to make things worse for you. So what you have to do is to ensure, and which we'll go through it again, um, as a company, we just need to have a lot more discipline in our finances and how we're managing our money. Next, please. Here, we're just going to go through what a 3-day delay can cost you. So we're just putting an example just on $1,000. So imagine you have $1,000 and then you didn't pay on time. So your GSC, it will be about $1, and then your shortfall is 60% of the earnings, just 60 cents. So there's a $1.60 penalty on $1,000. So imagine if your payroll is 20,000 or 30,000 or 40,000, that amount can add up to quite a lot and all eat away all the already thin margins that you're operating with. So again, it actually pays for you to be compliant 100% with the super annuation changes. Next, please. So in here, we're just going to give you a bit of understanding of what is the SG charge. So the final, this is the any difference. For example, you have to pay 1,000, but you only paid 800, so your shortfall will be about $200. So we work on that, and then we add the interest on the delay. There's the administrative uplift, which is 60% of the shortfall. So if it's $1,000, $600 is going to be the administrative uplift, and then you got choice loading of further another 25%. So you can just imagine something that starts off with $1,000 can end up being almost $1,500-$1,600 by the time the whole calculation is done. So the short answer is just make sure you don't miss your superannuation payments. Next, please. And this is another one where a lot of times some people think that, oh, we can talk to the ATO, tell them that, look, our business is struggling, or we have this issue or that issue, and we can waive it. Then just remember, the ATO by law does not have any discretion to waive this charge. So it is a charge that no matter what, regardless of your intentions, regardless of your business structure, it will be it will have to be paid. One of the things that we do tell, which later on in the slide I'll go through, what can we do to make things better. So just go next, please. Okay, so what we need to do, so I've told you what the problems are. Now let's work on what the solution should be. So what we should do is, as directors or as the operational manager of a company, we should be looking at and forecasting where our spend is going to be. And essentially, one of the things that I always tell my clients is to keep about 20% of the profit for rainy days or for your future expansion, and mainly for rainy days. So this is what you need to check, that, okay, what is our weekly wages bill is, or what is our monthly or quarterly wages bill is. And we should always keep at least 3 cycles of money in our account. So if my bill for the wages is about 10 grand, I should always make sure in my company that I have 30 grand sitting in that company, just so that I can make sure I can run my weekly pay cycle. The second thing you can do is have a look at your pay cycle. If you're paying weekly, see if you can push it to fortnightly. And this is what you're going to do now is ensure you're invoicing on weekly basis. That has to be pretty, you can say, a strict rule, that weekly basis. And if you have larger clients, like a still one-to-one client, then those clients, they need to be billed on a daily basis if you can. Otherwise, at least by the end of the week, so that you're not missing out on any of the funds, because as I mentioned, the gap is quite a lot, and we need the amount of money to continuously come in so we can make sure that we are paying our bills. The third thing you can do is have a talk to some of your other suppliers that you're working with, all the suppliers, they do understand what challenges that you're going through, and see if you can negotiate some payment terms with them, whether it's 15 days or 30 days or 45 days, whatever the best you can do. But you need to look at that. So essentially, you need to look at your top 10 spend after your wages, and then I'll go talk to these guys and see what sort of payment terms you can negotiate with them. Next, please. Okay, so this is just a quick action plan we prepared for you guys, which we'll send it to you. So first of all, you need to make sure that you have a complying payroll or rostering software, a software that can actually distinguish between allowances and distinguish between what sort of shifts they've done. In terms of have a look at your workers and see they're correctly aligned with the SCHADS Award. And June quarter, you still have up until 28th July to make sure you pay your June quarter. So pay the June quarter, and then essentially from this payroll, we're on the payroll processing anyway. Make sure you build a pretty good employee or contractor onboarding process where you're not giving any shift or you're not giving any work to any of your employees before you've got the required documentation from them. That's become very crucial now. Next, please. So the key takeaway, essentially, so no more quarterly, no more 90 days to pay. You only have 7 days to pay, and if you don't pay, there will be a penalty, which the HEO cannot waive. And essentially, you're facing with another pay rise of 4.75%, which is larger than the NDIS price that's gone up. So there will be gaps. So we do need to work and ensure our compliance, and we have a good rostering software, good compliance software, as well as a good strategy for our business. I suggest normally any business that's doing $1 million and up should prepare at least a budget and then work as per that budget so that they know exactly what they're going to be making and what sort of expenses they'll be facing. Next, please. Okay, so that's it from me. If anybody's got any questions, please feel free to let me know.
Okay, do we have anyone who has any questions in the crowd, please? You could just raise your hand and unmute.
Yeah.
I think it's a busy week for
That's okay. So
everyone.
look, you guys have got my contact details there. If there's anybody who will have any questions, please feel free to reach out to us, either to the Supportly marketing team and then let us know. And then at the same time, if you guys want to for us to have a look at your business and do a review for Supportly customers, we're doing an obligation-free complimentary review of the payroll system, just to ensure they're complying with all the legislative changes that are happening. So if you need to book the session, we will send you a booking link. Please book it through there, and we will take it from there.
Okay, sure. And what we'll also do for those people who have not attended the webinar, of course, we'll be getting this recording. We'll also send you guys the link so that you can book a session with us so that we could talk to you about that complimentary that we're offering. Okay? Come
All
on.
right. Thank you so much, Jessica. Thank you for having me.
Thank you so much. You have a great day.
You too. Bye-bye.